Good morning, everyone, and welcome back to the show Trỗi dậy sau khủng hoảng, the rising after the pandemic, when we talk to experts about the growth, development, and even take up opportunities of Vietnamese economy and businesses after COVID-19 pandemic is being brought under control. My name is Queen, and today we are really excited to kick off our first English show ever with the Chief Investment Officer of VinaCapital, Andy Ho. Andy's tenure with VinaCapital has lasted about 15 years, giving him the special insights and experiences about Vietnamese economic sectors. Andy, thank you so much for joining us today for the show. VinaCapital needs no introduction, but we'd love for you to, just introduce yourself and your long tenure with the company.
Hi, good morning. Thank you for having me on the show. I've been in Vietnam investing since 2004. At that time, I started out with Prudential, and then in 2007, I was very fortunate to join VinaCapital, and I've been with VinaCapital since 2007. And over the years, we've grown the asset under management quite significantly to a point where today we're about $3.5 to $4 billion under management. And our strategy is really simple. We focus primarily on investing in Vietnam, but we have many asset classes. We would invest in infrastructure, real estate development, equity, both public equity and private equity, fixed income, and also venture capital. So our focus is Vietnam, but in many asset classes. And we've been very fortunate over the years to have a great team and have been growing, and the returns have been pretty strong over the last 10 to 15 years.
That's awesome. So given that you've been in Vietnam for a long time enough, and you're Vietnamese, and you're closely connected with the Vietnam economic sectors. So in the macro level, can you just give us your comment on the Vietnam's economic recovery, after being affected by the severe COVID-19 pandemic?
Yeah, I think if we have to look at the period of roughly 2020 to 2021 and then 2022. In 2020, we've been very fortunate to deliver a positive GDP growth. This year, although we've had a Q3 that's been very rough, I think this year we will still deliver a strong positive GDP growth, anywhere between 2 to 3% for 2021 over 2020. This is very strong relative to most countries around the world. As you know, a lot of countries contracted their GDP, and Vietnam has been very fortunate to have continued to grow. And as a reflection of that, the stock market has grown significantly over the last 12, 18 months as well. And the support for the stock market seems to be from domestic retail investors. They've been very positive and very bullish on the stock market, and they've been pushing it up. So a sense that the economy is strong, it's growing, and probably into 2022, we may see growth anywhere between 5 to 7%, sort of back to the rate that we've been growing before the pandemic. And as a reflection of that, the market is usually 6 to 12 months ahead. So the market's saying, yes, we do believe that the economy will grow 5 to 7% in the coming year. Therefore, the stock market has gone ahead and moved itself to roughly 1,500 points as of today. And so I think in general, the market has been very reflective of a growing GDP, a recovering GDP. And the other thing to keep in mind is that the local currency, the VND against the US dollar, has also been appreciating. And that's good, both from foreign investors as well as domestic investors. And then interest rates remain positive. In other words, the interest rates that you can earn at the bank is higher than inflation. And so that's what we call real interest return, and that's been positive. All that contributes to a very strong domestic currency, which we continue to see it appreciate against the US dollars in the coming year.
Yeah, that's awesome. So you've mentioned that, given your close relations with foreign investors. Do you see that their views on Vietnamese economies has changed throughout, like before and after the COVID-19 pandemic?
Well, I think from our investment world, there's two types of foreign investors. The one is the foreign direct investors, which are the Samsungs, the LGs, the Intel, the multinationals that come to Vietnam, invest, and they invest for the long term. We call that sticky money. And they build factories, they create jobs, etc. The other group of investors is called FII, foreign indirect investors. So I think from the foreign direct investors' perspective, they continue to be very positive in Vietnam. They feel that the demographic in Vietnam, the location of Vietnam, the infrastructure, and the potential to have a long-term production and export business from Vietnam is very strong. So the Intels of this world would come and produce the chip and export it globally. They feel that Vietnam still has a lot of potential, and they continue to come. The other group, FII, as you can imagine, from the beginning of 2021 to now, they have been taking money out of the country more so than they've been putting in. And it really is not a reflection of Vietnam per se. It is a reflection of the options and the opportunities that they have around the world. If you're an investor sitting in New York, you have options to invest in the US, in France, UK, Australia, and Vietnam. And because of the pandemic, there's been a lot of opportunities. The stock market went down a lot, went up a lot, and there's been a lot of opportunities around the world. And so what's happened is these investors have taken some money out of Vietnam, redeploy it into these economies. But I think in the next 6, 12, 18 months, they will see that, okay, we've made enough money in these opportunities. They're going to bring the money back to Vietnam to reinvest again in the US, in the Vietnam stock market.
Yeah, this is awesome. So going along with the changing of COVID-19, has the fourth wave of COVID-19 pandemic changed the capital flows into Vietnam?
I think the direction has been leaving. The foreign investors have been taking money out. That really hasn't changed in Q3. I think that we'll probably begin to see some changes in 2022. But keep in mind, as foreign investors kept taking money out of Vietnam, domestic investors replaced them. And domestic investors replaced them significantly more. Our liquidity today is about $1.2 to $1.5 billion a day.
Wow.
And remember, 18 months ago, it's only $150 to $250 million a day. So domestic investors have overcome the negative pullout from the foreign investors in a significant way.
So Andy, you are the go-to voice of both public and private equity investing in Vietnam and other developing markets as well. But I want to go into details on the private equity in Vietnam, which is because Vietnam is becoming like a more attractive destination for global PE investors. So first, can you just give us a quick definition of PE? For those who's not familiar with those terms.
Yeah, in our definition, I think every firm has a different definition, but in general, our definition is private equity. Private means that we get to negotiate a private opportunity to invest in a business. The business can be a family business, unlisted business, or even a listed company. As long as we're able to negotiate a private transaction with the business, we call it private. And equity is we put cash or capital into the business, and in return, we get equity of the business. So that's just a definition, but the products that we use under private equity can be in the form of convertible debt. It can be in the form of convertible bond, convertible debt, equity itself, preferred equity. There are many types of products that we can take on to hold on when we give capital to the business. But more importantly, we're able to negotiate a private transaction. Second, we have the right to do due diligence. It's important that we are able to bring in a Big Four auditors to do the financial due diligence. We would also do a legal due diligence. And we would also do an ESG due diligence, an environmental and social governance due diligence to ensure that the business that we invest in, we understand. It's like for you to buy a car. Before you buy a car, you want to check out the car, bring your mechanic to see the car, and that's what due diligence is about. The third area for private equity is that we get to participate in the board of the company or part of management in one way or another. We can hire a CFO, and we can help hire a product development person. We can sit on the board of these businesses. So it's an investment whereby it's long-term. We are with the business for 5 to 10 years. And we're not buying 1 share or 2 shares, we're buying 10%. We're investing 20%, we're investing 30% of the business. It's long-term, large investments that are privately negotiated into these businesses.
That's excellent. Maybe you can give us a bit about how PE market has changed in Vietnam over time. I guess it's been 15 years since you...
Yeah, I think that the most glaring change that we've seen over the last 15 years is the size. When I first started investing in PE in Vietnam, it was $5 to $10 million. Today, we're investing $50 to $100 million each transaction. So we've grown about 10 times,
right.
for every investment we make these days. The second thing we've seen significantly change is the management skills. The management skills of private businesses have improved significantly. I think it has a lot to do with, one, a lot of the managers have started to develop experience, whether working for a Vietnamese business or a multinational. Now they come and run private businesses. Or two, they've been very fortunate to be educated and have a degree in the United States or the UK, Australia, and be able to work in those countries and now have come back to run some of these family businesses and private businesses. So management quality has improved significantly.
Yeah. What about when COVID-19 happened? Do you see the trend is slowing down, or it's just this not being affected? And if it is, then in what way?
Yeah, there has been a significant slowdown in PE activities because of COVID-19. And the obvious reason is that a lot of multinationals or global private equity shops cannot travel to Vietnam. The folks that you talked about earlier, when they cannot come to Vietnam, they cannot do due diligence, they cannot meet the management team, they can't do anything. So travel is a huge hurdle. If you can't travel to Vietnam, it's a huge hurdle to do private equity transactions. And that's been very fortunate for us because we live and we work in Vietnam, and it creates more opportunities for us to invest.
Yeah, excellent. So speaking of COVID-19, like you said, PE funds, they've also been through tough time during COVID-19. But in terms of sectors, I saw that VinaCapital's it's been mainly focused on 3 sectors recently, which is real estate and materials and finance. So can you elaborate it more, what are the potential of these sectors, and what are, and in this year and the next year, which is 22, excuse me.
Yeah, okay, so I'd like to comment on that a bit before we jump in the future. Our exposure, our portfolio exposure, you're right, it's very high in financials, real estate, and materials. It has a lot to do with the investments that we've made 5, 10, 15 years ago.
Okay. Yeah.
It has appreciated. We invested in Hoạt in 2009 when the company was about $500 million in value. Today is over $10 billion in value. So that investment itself has gone up significantly in our portfolio. We invested in Novaland, we invested in Cang, we invested in Vinhomes. Again, all these real estate companies have increased in value significantly. So it's not to say that we're not focused on real estate or materials. It is because we invested many, many years ago. Now the value of these assets have gone up significantly in our portfolio. And when you look at our portfolio, you think, oh, he's focusing on material, real estate, and financials. We like them, don't get me wrong, we like them, but they've become a big exposure in our portfolio because we've been very fortunate to see an increase in value over time. Now, we look forward. As we make investments, we look forward. And as we look forward, the sectors that excite us is healthcare. We think the population will become older. Everyone gets older every year. People will become more and more wealthy. They will have stronger disposable income. And as a result, one of the first area they'll spend more and more money is quality healthcare. Other areas is education. They will want to spend more money on quality education. There's a lot of private schools, international schools in Vietnam, but I used to be a chairman of the International School of Ho Chi Minh City, ISHME, and I understand education quite well. And I am a bit sad that the quality of education that the larger population can access to, it can improve quite significantly. And I think this is an area, an opportunity for investments for us, not only for us, but also for the government. So education, healthcare, we still like financials, don't get me wrong. We still like material, we still like real estate, but we also like logistics, right? We want to see more logistic business because when more foreign direct investors come to Vietnam, they want to have a piece of land to build the factory. When they build the factory, they need to move the goods to the ports, to the city, to distribute. They need to have warehouses, they need to have trucks. So logistics become a very important play in the economy. So those are just a few areas or a few sectors that are really exciting in the next 2 to 5 years.
Yeah, what about those like exposed sectors, like let's say hospitality or travel or service? How have they been like affected in their portfolio investment? Yeah.
I have to admit, they have been the most affected. The airlines, the hotels. I don't know, when was the last time you traveled? Right?
Probably like, 2 years ago.
So, exactly. And you didn't travel and you didn't spend money. So where's the revenue coming from for the airlines, the hotels, the restaurants? So I think it's going to be a very slow recovery for the hospitality and the airlines business in the next 12 to 18 and 24 months. And keep in mind, the mental state of the traveler will also change. For example, business travelers may travel less because they find that using Zoom is very effective, right? Using technology is very effective. So a lot of things is going to change, but I have to admit, over the next 12 to 18 months, it'll be a slow recovery for the airlines and hotels and service provision business as people get used to this new way of living with COVID.
Yeah, that's amazing. So with all the negative effects on the economy, there's times when good comes from bad. So which have been surprise sector that have popped up on your radar in 2021, and maybe you can give us a simple explanation, like.
I think the most glaring areas of change that we were all very surprised is the growth of technology, the use of technology to deliver food and goods to your home, the use of e-payments or mobile banking or some sort of financial transactions online or using your phone to pay for the goods and services to deliver to your home. That has increased significantly over the last 12 to 18 months. And that's forcing us to think about how some of the businesses that we invest in will take advantage of technology over the next 12 to 24 to 18 months. They have to invest in technology because now they recognize that the people of the country are very savvy when it comes to technology. They use technology to communicate, to transact, to advertise, and to play games, to exercise, you name it, they do it. So what I'm saying is maybe businesses, normal businesses like banks and schools and even logistic businesses will have to take one step further in terms of investing in technology to make sure that they're able to connect with their customers in all mediums, whether it's the old way or the new way, because we're now changing the way we live our lives, and technology has become a very, very important part of our lives.
Yeah, I guess it's very like 2 years ago, if we talk about, making a talk show or whatnot, we have to travel like from Saigon to Hanoi, for example, just to do one show, which is like an hour. And so so I want to ask more about the quality of business, since that's a topic that I'm sure that our listeners would love to hear more. So during your 15 years of participating in PE market, how have you witnessed the change of the quantity and quality of PE in the market in Vietnam in terms of products and service and management and whatnot?
Yeah, I think I've been very fortunate to be in a great economic and developing environment over the last 10 to 15 years. And as a reflection of that, I've written a book this year that's been published it's on Amazon. It's called Crossing the Street, and it talks about how some of the changes that are happening in Vietnam and how do investors make good investments in Vietnam. And I think one of the key areas that we focus on now is quality. And we looked at how we did investments in the book. Now we're moving forward as how do we identify good businesses, right? So there's two parts. There's a world of how do you make good investments, how to protect yourself. Now it's a world that we need to find where how do we identify quality businesses? And we've identified quality into 4 areas. One is management. How do you know management is of high quality? The second is customers. How is your customers of high quality? The third is financial statements. Is the financial statements a good reflection of your business in the past? And is a good reflection of your strategy in the future? And the most important part of quality also is products and services. So if you are buying a product, you're the customer and you buy a product and you don't think the product has a higher value than the price you pay, then you may not have a quality product, right? So people want to buy things for, let's say, 100,000 VND, but get more than 100,000 VNDs worth of value in it. That's what we call quality. And quality also revolves around after-sales services. When you buy an apartment building, you bought a 4 billion or 5 billion VND apartment, will the developer, maintain the quality of the outside of the building? If the building cracks, will they fix it? Right? If the light is broken, will they fix it to maintain the quality? Because 5, 10 years from now, you would like to resell your apartment. If the quality of after-sale service is terrible, you cannot sell your apartment anymore. So that speaks to the quality of services related to products that companies sell. So for us, as we go forward, we're very keen on identifying businesses that have potential. You don't have to be of quality, that have potential to be of high quality. We're happy to look at a business that is somewhat broken or is somewhat weak, needs improvement here, needs improvement there. That's okay. We like that. We want to come in, we want to help, but we want to make sure that the owner, the current owner, or the chairman, or the management team knows that when we enter, we will try our hardest to increase the value of the business through increasing quality, through increasing revenue, through increasing profit of the business. And we take quality very, very important and serious. We look at the brand, we look at the product, we look at the people, and wherever we see there's a room for improvement, we'll make those improvements.
I guess you just answered my next question, which is like, the quality that VinaCapital look for in terms of before investing. But can you elaborate it more about or share a bit about specific quality that you guys looking for when investing in a company?
Yeah, management, easy. Is the management of quality. So we look at the number of years they have in the industry, the education that they have. Is it a family-run business or is it a professionally run business? Right? Do they learn from the mistakes that they make? Do they document? A lot of banks now, really good banks, they document mistakes that they've made. They document, let's say, for example, if your internet bank was hacked, they would document it. How was it hacked? How do we fix it? And how do we go forward? So it's all documented, and they teach it to the next group of bankers coming through. So the ability to document and teach and train the people speaks to me of a high quality management team. High quality management team also listens. They always think their business is broken. They do not think their business is perfect. They want to make improvements. They want to learn. They want to see how things change and how can they be better. And the key is also they want to expand their market. So if you're in the market to sell, for example, you're in the market to sell a motorbike, two-wheel motorbike, and you become really good at it, and your management team thinks, oh, we have 80% market share in motorbike. Well, to us, that's not good enough, because instead of looking at yourself as a player, as a company that sells motorbike, you should be looking at yourself as a player that helps produce goods for transportation. So the value of the entire market is significantly bigger, right? You have bicycles, you have cars, you have motorbikes. So as you expand your market, you have to think about new products and a way to grow your business further. And that's about thinking about working in management that it's willing to think outside the box, moving further, and always keeping ahead of the game.
Yeah, that's awesome. Yeah, you've mentioned before about due diligence. So, yeah, when the pandemic happened, is that something changed when you do your due diligence, or is still the same way as before?
Yeah, fundamentally, the due diligence is the same. We
Yeah, right.
hire a financial advisor, we
Yeah.
have legal, and we have ESG. But the way they do due diligence takes into consideration the world that we live in today. And the world we live in today is obviously dealing with COVID, and then how we're going to continue to deal with it in the next 6, 12, 18 months. Just to give you an example, when it comes to the financial due diligence, we keep a very close eye on cash flow. Because of COVID, your cash flow, your ability to pay debt, your ability to pay bank interest has reduced significantly
Yeah.
because your revenue wasn't generating for 2 or 3 months. How do you deal with that, right? That's an important question for due diligence. And so the basic stuff is unchanged, but the way we look at the micro, the details of the business as it relates to what's going on today has changed.
Yeah. Yeah, you've talked about due diligence, so I want to kind of like dig a little bit deeper on that, which is like about the ESG, environmental, social, and governance, because it's been important like part of due diligence, procedure. So, could you elaborate it more? Like, why is that crucial, and especially in the past few years?
Have you ever heard of a company called Vidan? They were the largest MSG producer in Vietnam. Now they're gone. If you imagine we invested in that business, we would lose all of our money. Yes, they polluted. So ESG is about protect. E is the environment.
Yeah.
How do we make sure businesses are done in a way that they don't destroy the environment? Whatever they do in the areas that they operate, I want my children and my grandchildren to have a safe life there in the future, right? So
Yeah, yeah.
ESG is very important because I just gave you an example of a company that didn't care about the E in ESG, and now they're gone. They're the largest, and it's gone. Not too long ago, right? I'm not even talking
I
about
guess
a
it's
Thai company or a Taiwanese or Chinese. It's a Vietnamese company, gone, right? So ESG is very important to us. It's okay for businesses to be weak in ESG. We want to be there to help and improve it, okay?
Yeah.
And governance is also important. Governance allows people to make independent decisions. And if you don't have proper governance, you're going to get in trouble, okay? Have you heard of a company called Vietnam?
Sorry.
Vietnam is one of the largest restaurant business in Vietnam. What happened to the company now?
We're in
Gone.
bankruptcy. Yeah.
Why? Governance was terrible.
Okay.
They were not transparent. They used money that was not appropriate, and they're gone. So governance is very important. I've given you 2 examples of large businesses that do not respect
Yeah.
ESG, and now they're gone. And what happened to the shareholders of Vietnam? They've lost all their money, and they're
Exactly.
suing. They're suing the owners of Vietnam, and they've asked Interpol to go after them. Right? And so now you can imagine why we are so scared that if a business isn't properly thinking about ESG, they may get into trouble in the next 5 to 10 years, and we will lose our value, our shareholder value. Okay? But that's okay. We have a lot of consultants that we work with to help these businesses improve their ESG weaknesses. So it's okay. We don't shy away from businesses that have bad ESG. We don't. We are private equity investors. We want to come in, we want to help. Now, this is different from public equity, public listed.
Yeah.
So if a company is on the stock market, it's fairly difficult to get them to make changes because they have thousands and thousands of shareholders. And when you make the investments, you buy a share, you buy 10 shares, you buy 1,000 shares, you buy 1,000,000 shares. But those shares do not allow you to make management change, to make the board change, right? Because you don't have any agreed terms. So you would hope, you would write a letter to them, you would tell them, okay, you can please improve this, please improve that. But it's all based on hope, right? We will write letters to these businesses, don't get me wrong. We will even rate the business, whether they're strong or weak in ESG, and then make our investment decision. But unfortunately, it's not easy. It's not easy to make publicly listed companies change in terms of their ESG improvement. While private equity, because of our terms of investment, we are more able and more practical in terms of making changes.
But yeah, it seems like VinaCapital has applied the ESG since day one. So how do you comment on the ESG implementation of Vietnamese enterprises, these days, like just recently?
Yeah, I think it has a lot of room for improvement. I think the Ho Chi Minh City, the SSC and the MOF, they have their own guidelines. They have a book. There's a guideline on ESG. On the international in the international community, there's the World Bank has a standard for ESG. We use a ESG model that comes to us from Europe, and it's very similar to the World Bank. And we apply international level of ESG to our investee companies. And I think Vietnamese businesses are beginning to see the need slowly. It's not fast, slowly, to make these changes. And I think it has a lot to do with the younger generation, the young folks like yourself, who care a lot more about the environment, who understand more about the environment, who have the time to read more about it and how and what you can do to make it better, right? For your parents' generation, they didn't have that luxury. Everyone was poor. We had to be very focused on trying to live our life day to day, make money from day to day, and our ability to learn about ESG and all. We didn't have the resources, and as a result, I don't blame that generation, but they've moved on. The younger generation has more time to learn about these things, and they care more about the environment. And I think it's very important that Vietnamese businesses begin to listen to the younger generation and think about how to sustainably grow the business over the next 10, 15, 20 years.
That's awesome. Yeah. Like we've mentioned before, the PE market in Vietnam is still emerging. So we've seen a lot of like deals size that quite small, but I think it's getting bigger like from time to time. For example, this year we have Masan's the CrowdX, which raised $400 million from Alibaba and Bering, or $340 million from SK Group, and expected to raise about $300 million by the end of this year. That's quite a lot. These companies, like, now it's hard to keep track, but yeah. So what do these big like global deals and investors reflect the maturity of PE market in Vietnam?
No, I think it's great that we have this level of capital coming in from great brands, from SK, etc. I think that's great. And we continue to do what we do, and they would do what they do, and we would continue to look at taking larger positions, 10 to 30% of businesses, and rolling up our sleeve and making changes. And I hope these investors are doing the same for Masan and Bin Homes, helping them change, helping them grow, become a regional and international businesses. So we're very glad these capitals are coming, and I think it gives smaller businesses hope. It gives medium-sized businesses hope to grow into a $1 billion business, to grow into a $10 billion business or $20 billion business. Because in order for you to absorb $300, $400, $500 million in capital, you're gonna have to be $5, $10, $15 billion in value, right? So it gives hope that smaller companies can grow up and be very, very big in environment in a country that's 100 million people.
Yeah. So we've covered size, criteria, quality of businesses and whatnot. So let's move to the risk that PE funds in Vietnam have to face in terms of investment. So what factors define risk in PE funds investment investment in Vietnam during this time? Like what changed?
Well, I think first of all, in general, what are the risks, the difference between private equity and public equity?
Yeah.
Right. The key risk is that what we invest in is fairly illiquid. We cannot sell, right? For example, last Friday, when things were pretty bad with the new variant, a lot of people sold the shares around the world, right? As a private equity investor, you just cannot sell, right? That's called illiquid asset. We hold on to illiquid investments. As a result, we need terms of investment. We need to sit on the board. We need to see how businesses develop, right? So that is the number one difference between private investments and public investment. It's what we call liquidity risk. Other than that, we have other risks that are quite similar to public investments, whether they're macro risks from the economy, regulatory, competitive risks, management risks, and all that stuff. But as time goes by, we do have to look at the return. And what we do is, if the return is high and the risk is high, we have to what we call risk-adjusted return. If the risk is low, we can expect a lower return. And generally, when the businesses are smaller, they tend to have a higher risk, and we would expect a higher return. When the business is much bigger, like a Novaland or Vinhomes or Kangbian, you would expect the risk to be lower because they're much bigger, they're more experienced, they have a brand, and the risk and the return would be much lower when you make these investments. So really, at a high level, the size of the business has a lot to do with how you view the risk-adjusted return. When it comes to sector, it changes a lot, right? Sector has a lot of economic implications. The economy has a huge impact on financials, logistics, and materials. And so we have to be very conscious of how the economy changes and how that reflects to the risks of each of the sectors and what sort of return we can get. Just to give you an example, we've been very bullish on the consumer food and beverage businesses over the last 5, 10, 15 years. Lots of brands, Vinamilk, Phúc Long Coffee, Chinsu, lots of good Vietnamese brands. So we've made a lot of investments over the years in consumer food and beverage. But over the last, 5 years, what I've noticed is that international brands have come to Vietnam a lot, right? You even eat and drink international brands, right?
Yeah.
So what happens is the demand for consumer goods is still very strong, but the supply, the competitive supply, right, for international brand has increased significantly, making it more and more difficult for Vietnamese businesses to compete. Now, you know Starbucks coffee, right?
Yeah.
Okay. So 5 years ago or 10 years ago, did you have a Starbucks coffee?
No, never heard of it. Yeah.
Yeah.
Nobody
And you were
has.
drinking probably Highlands coffee or Trung Nguyen's coffee?
Yeah, that's what we all like growing up familiar with that. But then, from
Then
time
came
to time, it's
Starbucks.
just, yes.
So
Sure.
did the demand for coffee change? No, the demand for coffee actually went up slowly. But now the supply for good branded coffee has increased significantly, making it more competitive for Vietnamese brand. So that's a sector that the sector's good, but the competition is very strong now.
What about like during the most, stressful time, businesses have gone through like tough time, and what did VinaCapital bring to those businesses? The one that you guys, of course, invested in.
The biggest stress for businesses when it comes to hard time is one item: cash flow.
Yeah, that's true.
Right? Businesses borrow money. When they don't generate cash flow, they can't pay the bank. When they don't generate cash flow, they can't pay their employees, right? So the biggest problem is cash flow management. And this is why I tell people who start out businesses, startups, venture capital, the number one thing you think about beyond your technology, beyond your products and services, is cash flow. If you don't keep an eye on your cash flow every minute, every hour of the day, every day of the week, you will die. Cash flow. In fact, they say cash is king, right? So when you're a good business like Apple, or when you're a good business like Hoảng, you have a lot of cash. Okay? That is a very strong business. You have a strong balance sheet. So you're not going to be in distress. So when we define a business in distress or hard time, we really said that, hey, they're not able to meet the next payroll payment. They're not able to meet the next debt payment. They're not able to meet the next interest rate payment. So managing cash flow is key. So what do? We see this in advance already. Okay? We're not going to come in and all of a sudden inherit a business without cash flow. No, absolutely not. We will come in, we will see that. We will see your cash flow. We will see how much cash you have, how much you spend. And so step number one is prevention. We would help you prevent from getting into a very bad situation.
Yeah.
Right? We will understand how you manage your cash flow. We will maintain your debt balance to a reasonable level, okay? So you don't get into trouble. That's the first step. So at times, economically, for example, if you have shares in an airline business or a hotel business, you didn't expect COVID-19. Let's say you own a hotel. Most likely that you borrow money from the bank to build your hotel.
Right.
And you will need to use the revenue from the hotel to pay the bank debt. Here comes COVID. Here we're now September of 2020. You have no guess.
Yeah.
Where do you get the revenue, the cash flow to pay for the debt? Oh, there's some cash on the balance sheet. We'll use that for now. Okay. Come April of 2021, no customers. Your cash flow becomes smaller and smaller and smaller and smaller. Your debt hasn't changed. Your interest rates keep going up, 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 and up. So these are businesses that are in trouble. And as a financial person, one thing we do is we go to the bank, we help them restructure. We said, look, we need to restructure this debt. We need to pull it out further. So instead of repaying this year, that year, we will pay 2 or 3 years from now. Pull it out. In return, we will put more money into the business. So the bank's not going to say, okay, I'm not going to agree to your terms unless you give me something. So I give you a little bit, and they give us a little bit. So it's about negotiating and helping the business manage their cash flow out of this difficult time.
Yeah, yeah. Like you said, like a lot of businesses, they're running out of cash. And yeah, so is there any case when VinaCapital has to consider between like investing more or write off?
Yeah, we've been very fortunate to not have to write off any of our investments over the years,
Okay.
because we sort of plan well in advance. So we've had a couple of situations, not many, but a few situations where we have to put more money in to show the bank that we support the business and that the cash flow will be strong in the coming years. And because of that, the business thrive. And we've done well. Just to give you an example, not too long ago, you know a company called IDP, IDP Milk. It's from the north, and we invest in this business, and they didn't do so well. The revenue went down, everyone went down. Lots of debt and cash flow was a problem. So we put more money in, and we changed the management team. We put more money in to show the bank that we support this business. We put in a new management team. And now, you know, their revenue is easily upwards of $500 million today.
Wow, that's
right?
Excellent. Yeah. So yeah, among those businesses that you guys have invested in over the years, so what is the biggest value that VinaCapital adds to businesses? Like, if you can only choose one, what is gonna be? And I know that you're about to say like management, but like just beside management.
Besides that, I think, look, it's really, we invest because we want to make money for our shareholders.
Yeah,
right?
fair.
We invest, right? So the easiest way to reflect how we've done is the value of our investments. So if I invested in VinaMilk many years ago when it was $500 million in value, and when I exit VinaMilk at $12 billion in value, that's value. What more can I say? I made a lot of money on VinaMilk.
Yeah,
I made a lot of money on P&J. I made a lot of money on Hoảng. So returns and making money is our job, and we have to make that return, and we have to give it back to our shareholders. And that's what we do. And so the biggest value we see is in the numbers. It's very simple, right? Management, products, everything, that is all part of an entire game or entire company or entire structure that we have to use in order to increase the value of our investment.
Yeah, yeah. One of the things that I think that affect the most on the investor decision in terms of decided to investing is the law, right? So the new investing law just took effect in 2021, and how does it affect the PE investment, especially with those foreign investors?
At the moment, we haven't seen any major impact on the new law. It's really focused on the public equity side more so than on the private side. Just to give you an example, on the private side, we're not really subject to the foreign ownership limit. So I can take a large position of a company. But when I take the company public, more than 100 shareholders, then the foreigners will have to subject themselves to the foreign ownership limit. But as long as the company is private, in many sectors that we invest in, we're not subject to the foreign ownership limit. Right? Just to give you an example. So the ability to do private equity allows us to have a lot more flexibility in investing than to invest in public equity. In terms of the laws and regulations.
Yeah. Correct me if I'm wrong, but trade sales and buyout, secondary buyouts seems to be like the most common exits, while IPOs, still not that common exits in Vietnam. So, is there any particular reason for that?
No, I have to admit, over my time in Vietnam, I would have to say it's roughly 50-50.
Oh, okay.
And it depends on the economic environment. Right? For example, in 2021, I've had the fortunate opportunity to take two companies public. Right? OCB Bank and An Woodworking. So OCB and ACG. So we make these private investments and they went public. Over the years, we have sold many companies through a trade sale. We sold our position in DXG to Taisho. We sold, do you remember a company called Halico in Hanoi?
Yeah.
They sell vodka. We sold it
I
to
think it's still
Diageo.
around. It's been around, yeah.
We sold it to Diageo. You remember a company called Prime? We sold it to Siam Cement. Now it's very big, right? So in terms of your question, we've had about 50-50 in terms of exits through trade sales. And exits through an IPO. And we've been, and it really depends on the economy. The economy right now is the stock market's very hot. When the stock market is very hot, it's easy to go public.
Yeah,
it's easy to take company IPO. When the stock market is not so hot, it's easier to sell to trade sale. Right? We sold, remember, the hospital system for Hoang Mi?
Yep.
Okay.
Yeah.
So Hoang Mi, we sold it to the Richard Chandler Corporation. So now they've expanded from 6 hospitals when we invested to about 11 or 12 hospitals today. But that's an example of a trade sale. Okay. So there are many companies that we've had trade sales, and we've also other companies that we've had an IPO.
Yeah. But that's the case of VinaCapital. I mean, like I'm talking about the the whole market, like the whole PE market. You know
in
what
Vietnam,
I mean?
you mean?
Yeah, in Vietnam.
Yeah, I think so. I think it's, you're right. You may be right. The number of private equity investments, the exits tend to be a trade sale rather than IPO. And the reason is it's quite simple. I think a lot of private equity investors in Vietnam have focused on smaller companies. The companies are too small.
Yeah, it's true.
Right? If you invest now, today, for example, if you invest $10 million or $20 million and you take 20% or 30%, that business is less than $100 million in value. Right? So the ability for a company to grow, let's say you invest in a company today that's 100 million. And let's say 3 years from now, you want to take it public. And 3 years from now, it grows 3 times to 300 million. A 300 million business, your return is really good, right?
Yeah,
300 over 100 is really good.
Million.
But a $300 million business on the stock market, nobody pays attention.
Yeah.
It's too small. Our stock market has grown up a lot. So what happens is it's easier to do a trade sale when the business is small. Now, if you invest, let's say we put in $50 or $100 million in a business, and we have, let's say, 20%. Let's say we put $50 million into a business, and we have 20% of this business. So it's quite big, and so it's about a $250-300 million business. Let's say 3 years from now we grow 3 times, so we're at maybe $700-800 million in value. So our chance when we take it public, people pay attention, is significantly better, right? So again, when we invested in OCB, it was only $300 million in value. When it went public this year, it was $1.4 billion in value.
That was like
so a lot of people pay attention.
5 times or something, yeah.
Yeah, and we invested in 2017, 2018.
Wow, that's really big, yeah.
So if you invest and you want to take a company public, you have to think about 3 things. 1, does it have a brand? Because if you're the one who buy the stocks and you don't recognize the brand, why would you buy the stocks?
Yeah.
Right? So a good retail brand is important. Second, you have to have growth. You have to have a history of growth. Anywhere between, I would say a good growth story is about 20 to 40%. Top line and bottom line. Just grow steadily. Okay? Third, you have to have size. Because if you're too small, people are afraid that they buy, but they cannot sell. Because there's no liquidity. Why would you buy into a company and then 2-3 weeks ago, oh, I need money to buy a car. I can't sell the shares.
Exactly.
Right? Because the company is too small. Right? So those are important things for us to think about when we make the investment. Can this company reasonably go public in the next 3, 5, or 7 years?
Yeah. So in case of VinaCapital, can you share about the exit strategy?
Like in general, you mean?
Yeah,
I think I have to admit, we don't have an answer, but what we do is we create options. We say, okay, if Miss Gwynn has a company, let's say you have a $200 million company in cosmetic.
Yeah.
All right. So we invest in your business, and we put, let's say, $50 million into your business, and we own 20%. And so we say, okay, Miss Gwynn, where would you like this business to be in 5 years? Would you like this business to be in the hands of a multinational? You no longer run it, but you have a lot of cash in your hand and you retire? Or would you like to have this company listed on the stock market and you continue to control this business and you grow it?
So basically it's based on me, like based on the owner. Oh, okay.
Yes, you're in control. I'm only helping you.
Yeah. Just,
right? Then you're going to tell me, well, I actually want this company on the stock market. Then I say, Ms. Gwynn, are you producing with a brand, or are you doing OEM? Are you producing your cosmetic for someone else's brand, or are you producing it for your own brand? And he said, no, I have my own brand. That's great. Then you can go public. People recognize your brand and they'll buy your stocks. But if you produce cosmetic for L'Oreal, or you produce cosmetic for someone else, nobody knows you.
So
right? So we will have these discussions. And as we have these discussions, we will together discover with you and me what is the best route to take your company to a public or to a trade sale. You may say, look, I'm tired. I want to make some money and I'll sell my business and I'll take it and I'll retire. Okay, too. We'll take you to a trade sale.
What about like if I want to go, multinational? I want to sell to multinational companies. Trade sales, it is. Yeah.
That's trade sale. Most of the buyers, I'm not saying not everyone, most of the buyers tend to be multinationals. In the last 1 or 2 years, we've seen more Vietnamese businesses step up to buy out other Vietnamese businesses. But by and large, it is the multinationals that buy Vietnamese businesses.
Oh, okay, got it.
But hang on. When they buy Vietnamese businesses, you have to ask the question, what are they buying? And typically they buy 3 things. They buy your brand, they buy your distribution channel, or they buy your manufacturing capabilities. You may have all 3, great. You may have 2 of those, great. But you have to understand, if you build a business and you want a multinationals to buy, you have to answer the question, what are they going to buy? If you have no brand, forget the brand. Can you produce? Yes. Do you have a distribution in Vietnam? No, because I have no brand. So your only value is production, okay? They may pay you for your production only, which is very little.
Yeah, that's awesome. I think one of the household words recently in Vietnam is as SPAC, which is like special acquisition, special purpose acquisition company. Because you know many businesses, for example, like VinFast, they're planning to list in the States. So looking at the current SPAC trend, do you see like Vietnamese company, like what do they need to help to meet the needs of listing on foreign markets?
Yeah, okay, so let's take a step back. What is a SPAC? A SPAC is actually a company that they set up. You set up a company and you put money into the company, let's say $200 million into the company, and you list the company on the New York Stock Exchange or the Singapore Stock Exchange, okay?
Yeah.
So in the first month or so, you create a company, you raise $200 million and you list the company immediately. But what's inside the company? Nothing, just cash.
Yeah.
Just cash. Then you go find a target. Let's say in what you asked is VinFast, or let's say you find a company in Vietnam, XYZ. You find that company and you buy out that company. But let's say that company is $1 billion. How can you have $200 million on your balance sheet and you buy $1 billion? Well, you swap. So the shareholders of the business in Vietnam, instead of taking cash, right, they take the shares of the SPAC.
Yeah.
So it's like a reverse merger. So now, day zero, the owner of the XYZ in Vietnam owns 100% of the business in Vietnam. So once they merge with the SPAC, the owner of the Vietnamese business becomes the owner of the SPAC. You see what happened? So you're Miss Quinn, you have a $1 billion Vietnamese business, okay, this cosmetic business, and I'm gonna merge it with my SPAC in New York. And once it's merged, you become a major, bigger than me. You're the majority shareholder of the new SPAC because you put in $1 billion, I only put in 200 million.
Yeah, got it.
So you become the biggest shareholder of the SPAC and you own it and you manage it from the New York Stock Exchange. But wait a minute, you can see the problem now. All of a sudden you're a Vietnamese individual owning a major asset outside Vietnam on the New York Stock Exchange. Okay, that requires government approval.
Yeah.
Right, so the government has to think through this. How do we allow this? How is this going to work? I don't know if there's a law that says yes or no, but certainly it requires the government approval to allow Ms. Quinn to be, you own $800 or $900 million or $1 billion worth of assets in the New York Stock Exchange. How does that happen?
Are you asking me? Okay.
Yeah, so the government has to answer that question, and at the moment, it isn't clear. So the SPAC vehicles work in other countries because in the U.S. because it's U.S. shareholders that swap for U.S. shares in the SPAC. So it's easy. But going from country to country, it's much more difficult. So going from Vietnam to the U.S. or Vietnam to Singapore, it's difficult because you're a Vietnamese person, you're a Vietnamese shareholder one day, and the next day you become a shareholder of a Singapore SPAC. How does that happen? But you understand that in Vietnam, to invest abroad, you need to ask for government approval. This is investing abroad.
Yeah, that's amazing. Anyways, as we all witnessed, Vietnam is becoming a haven for PE investors. So to wrap up, what's the potential for Vietnamese company to, gain the PE fund support, ESG, branding, and product development, like you said before, in the post-COVID era?
So PE investment is a form of raising capital for your private businesses. So Ms. Quinn, you have a cosmetic company that's $200 million in value. PE is only one form of raising capital for your business. You can raise capital from the bank. You can raise more capital from your friends and families. You can raise capital many ways. So PE is one of them. So you're going to ask yourself, why do I want Andy or VinaCapital or any PE shop to come into my business? Well, besides money, there's plenty money. There's plenty of capital around. So why do you want VinaCapital to come in? Well, you want us to come in because one, you think we can help you grow your business from 200 million to $1 billion. You think we can connect you with other distributions, other customers. You think we can help you with the strategy. You think we can help you with ESG improvement. You think we can help you with human resources. We can hire a good CFO for you. If you think we can help you in many areas, then you would invite us in to become a partner, a private equity partner to help you grow the business. My job is to convince you that I can help you in all of these areas. Now, you can see that it's not me that's important. It's the people that I bring in that's important. I will bring in people with the expertise in running product development, because you're a cosmetic company. You need product development. So I'll find someone who's good at product development. I want to find someone who knows about the new age of marketing. We don't market on televisions anymore. We don't market on newspapers anymore, and magazines anymore. We market on social media. We need to understand KOL. We need to understand product placements and promotions. So the new marketing person will come in to help you run your cosmetic business in a different way, in a different manner to grow your business. So if you want someone to give you money, like your friends, give you money, leave you alone, then go to your friends. If you want a bank to give you money because it's low interest rates, go to the bank. They want collateral, give them collateral, they give you money, leave you alone. But if you want a partner to help you grow your business and go to the next level and to be $1 billion business, that's what we do from a private equity perspective.
That's awesome. Yeah. So Andy, that wraps up for today's show. As we've talked over the years, the PE market has been gradually improving. And I'm really excited to see, what the ecosystem has to come in. I'm sure that VinaCapital is playing a big role in the, existing ecosystem, and more to come, hopefully. Yeah, Andy, again, thank you so much for, just these awesome insights about PE markets and whatnot. Do you have any final words that you want to give out for, the listeners? Not necessarily about, PE market, but maybe like the chance of investing. Yeah.
Well, I think a lot of people, over the weekend, the Omicron variant came out of South Africa, and it's worried a lot of investors from the US to Europe on Friday, Saturday. And I think we're learning how to live with COVID. And I think market has somewhat overreacted. I think it's also an opportunity for people to take advantage of when market is low, to take a chance and invest in some of really, really good companies at values that are lower than they normally are, right? Because markets tend to be very volatile. And I think in the coming years, we will learn how to effectively live and work with COVID, and the economy will grow from there. And I think we need to make good investments, and we need to think about technology, how that helps our businesses grow. We need to think about the new paradigm in which we live in today. And hopefully with that, and as private equity investors, hopefully we can help these businesses think to some of these issues and grow over time.
Yeah. Again, yeah. So again, thank you so much, Andy, for those insights, and we hope to have you come next time. Thank you.
I look forward to it. Bye-bye.
Yeah. Thank you. Bye-bye.